Okay, guys, today I'll talk about money market instruments. So yesterday we spoke about bond market and also the general entries we have seen, types of bonds we have completed, and we discussed the important topics: puttable ball, callable bonds, angel bond, junk bond,
Yes,
paid-out concepts, take-home conventions, and what is 30%
deep
gain price?
discount bonds.
Yeah, what is that? How to calculate accrued interest part on the bond between two interest payment dates. And also we have seen all general entries while purchasing the bond until we dispose the bond, like until we sell the bond, what is the profitable and gain. Everything we're going to record on this general entries. We have seen all these general entries with an examples also, right? So today we'll discuss about money market instruments. So in this money market, yesterday I already told you, right? Like in the money market, majorly it's meant for the short-term money requirements. Like uh, if anyone wants to get borrowings for short duration, let's say like for a 1 week, 1 day, 2 days, or less than 1 year, if anyone wants to get any loan, they can go for this money market instrument. That's the major purpose of having money market instruments. Okay. So what is exactly this money market instrument? Who can go and buy? Who can go and get this capital and also in this money markets? So basically, in this case of money market, can everyone see my screen?
Yes.
Yes, sir. Yes,
So
Mahesh.
especially in this money market, it's meant for the short-term nature. Short-term lending and borrowings will be done in this money market instrument. So normally, like if they want short-term needs, maybe by the governments and large financial institutions, like we have a fund houses, the banks, financial institutions. Even in some cases, few high net worth investors also, not normal individual people. From the high net worth investors now will come and participate in this money market instruments. And even the transactions, may take place between over telephonic and a fax without having without having a personal meeting and all won't be there approvals and all. There won't be that much. Or just a phone call or maybe over email, simply by giving a fax or something, they'll get this money markets. Again, it's not for everyone. Like suppose even I cannot go and get my money market instruments or something in my current market. It's meant for the well-known investors, well-known parties. This money market transactions also will be happening between closed associates. Suppose we have a banks like HDFC Bank and ICICI Bank. If they need any short-term requirement, normally the bank and financial institutions they have to maintain some minimum amount with the bank, RBI bank, central bank, right? So if they want to meet that criteria, otherwise if they want to meet any emergency fund, immediately they'll go and get capital. They'll go and get their loans from the other banks. They may have a close relationship with the banks, so that's the reason they will be easy to get their capital. Loans or something from the other banks for short duration. Let's say for 14 days, 10 days, even for 1 day also, overnight also, they'll get their loans. That's the major purpose of having this money markets. Again, I'm saying this, it's not for everyone. The transactions in this money market will be happening for the between the closed associates, well-known investors, well-known parties only. The transactions will be done in this money market instruments. Okay. The main instruments we have like a commercial paper, treasury bills and all. We'll talk about it. We have T-bills, commercial paper, call money. We'll talk things. Okay. But just understand the meaning of money market for the short-term requirements. If anyone wants to meet their requirement of a loan within uh, within a short duration of time, that is also mean for the short duration, then the money market is a perfect place. And we can say like interbank transactions also will be happening. You know what is interbank transactions? Interbank lending. Like if there are two financial institutions, they will exchange their cash flows for a short duration of time, maybe for day to day. They will be having some deficits and they may have to maintain some surplus money, right? So they will use the surplus money. Suppose other banks may need the cash balance for short-term duration. This bank will lend that money to other banks for 10 days or 15 days. These kind of transactions will be happening between uh, NBFCs, non-banking financial institutions, and also the banking institutions. With these kind of institutions, it will be done. That's why we call it as a interbank lending. Interbank lending is also possible. Now we will see few instruments. Normally, that is Interest also will be payable on its principal values instruments. Interest also will be very high when we compare with the long-term loans and long-term lendings. In this money market instrument, definitely the interest will be a bit high. You know why? Why interest charges will be high in case of short-term instruments and money market instruments? Can anyone guess? Hello, can you hear me?
Earn more money.
It's actually for the short-term duration, right? So whenever we are
Eh,
lending it for the short period, definitely the interest will be high. Just give me a minute. Why today not so participative students? I'm not getting an answers from you.
Sir,
Interactive. You're not interacting with me well today.
Yes, sir.
Keep it very interactive, guys. The session
okay,
should
sir.
be very interactive.
Okay, sir.
Okay. So we'll discuss few instruments we have. The first one is call money. We'll talk about call money. So call money is, as I said, it is also borrowing only, but there is no any specified term on a day-to-day basis or something. It will be borrowed for any number of days. Suppose I'll borrow and I'll be keep on extending the days. Suppose first I'll borrow like 100 crores or 10 crores from some other bank. Then keep on extending the duration of the days for like 1 day, 2 days, 10 days like that. I'll be keep on extending the duration of a loan. And whenever I get a capital, I mean a cash, then I'll repay it. Even they can get a loan in a single day, the repayment also can be done in same day also. But there won't be any specified term. Is it for 10 days or 14 days or 1 month or 1 year? There won't be specified duration. That kind of money is call money. At the same time, lender also can call back the funds at any time. The lender means the person who is giving the loan. The lender also can call back the funds at any time. Suppose today I'm giving a loan to some other bank. Maybe tomorrow itself I can ask my capital to return back. Call money. I can call at any time my money. That is called call money. Because I have a surplus cash, you might took that loan, borrowings are given. But tomorrow or maybe after 1 month also, I may want my capital. So at that time, I'll ask you immediately you have to pay back. That is called call money. Always lender will have an option to call back his money, call back the funds at any time. And they are repaid on the same day also. They have to repay on the same day also. Okay. Then we have a notice money. Understood what is call money?
Yes, sir.
Everyone. Then we have a notice money. So in
Yes, sir.
this notice money also, like there won't be again specific duration, but it will be up to given only for 14 days. There will be certain duration, but up to 14 days only that will be given. That is called notice money. It can be more than 1 day, 2 days, or 5 days or something, but it should not be more than 14 days. That is called notice money. The maximum time period we can get in this notice period is 12 days, 14 days. If you want to get more than 14 days,
Very
then
short period.
yeah, only for short period. That is only for the maximum 14 days. Maximum 14 days. Minimum
14
1 day.
days. Yes, sir.
Suppose if you want to get more than 14 days, then what should you do? You have to go for the term loan. Term loan. You have to go for the term loan. So in this term loan or term money, more than 14 days, if you want to get any for fixed period, let's say like 1 month or 20 days or 40 days, 60 days, 6 months, 1 year like that, you can go for this term loan. Understood? Within this 14 days,
Yes,
if you
sir.
want to go, we can use the call money. Within this, beyond 14 days, if we want to go, we have to go for the term money. Understood? Give me a
Yes,
minute,
sir.
guys. Just give me a minute. I'm getting a call. Yeah. So that is called term money. Okay. Then next one is we have overnight money also. Overnight money. Overnight money means only for a night we will take the money as a loan and borrowing. So the money will be borrowed and lended on a given banking day, and also it will be scheduled. The schedule of repayment will be in the next day itself. Suppose if I am borrowing today, tomorrow itself I have to repay. There is no any extension of date. If you are extending, again that will be different date. It will be notice period, callment or something. So there is no extension. Today I'll get the loan. Tomorrow itself I have to repay that money. That is called overnight money. Understood, everyone?
Yes, sir.
Just give me a minute. Check my screen. Sorry. So yeah, so that is called which money? Overnight money. Within a day, we have to repay. Today we will get the loan, and tomorrow itself we have to pay back. That is called overnight money. And also there is a weekend money. So weekend money also same thing. Like overday money, like today we will borrow and tomorrow we will pay, right? But this one is last day of the week,
1 week.
1 week. And last day of the week itself we have to pay
7
back.
days.
Maybe today if I'm getting Monday I'll be getting
Saturday have pay. Return.
Sunday or Friday I have to pay
Sunday
back.
night.
Repayment will be scheduled
Sunday
on maybe
night we
following
have to
Monday.
pay.
Suppose if I am taking a loan on a Friday, Monday or something, maybe following Monday or something, there will be repayment. And weekend means there will be weekend, follow on day will be repayment will be done. Like Monday will be the payment date. That is called weekend money. So for
Yes, sir.
weekend only we are giving the loan. After weekend, the next day is Monday, right? On Monday, the repayment will be scheduled. On Monday, we have to pay back. Every Monday there will be repayment. Understood? And also the money will be
Yes,
getting on the
sir.
last day of the week only, not for the entire day, only for 2 days. Suppose like if you can consider Friday and Saturday and Sunday as a weekend, Friday we will get a cash. On Monday we have to repay only for 2 days. Suppose you are considering only in the Sunday is a weekend, Saturday you will receive the cash, and Monday you have to pay back. Only for one weekend. Getting the point?
Yes, sir.
That is called weekend money, not for the entire week. It's for a weekend only. Weekend is Saturday, Sunday, or it is only Sunday. Okay.
Sunday.
Yeah.
That means 1 day only.
sir.
And that is Sunday you have to take the money. Monday have returned.
No, not Sunday. And weekend we will take money. Weekend is
Okay.
either on Friday or Saturday.
Okay. Okay.
Weekend is either on Friday or Saturday. So we'll take it on weekend, and we will pay it on the next week first day. That is called weekend money.
Weekend.
Yeah. And we have intraday money. What is intraday? We discussed about intraday trading also, right? So here also we have intraday money. Can anyone tell me the meaning of intraday?
Repayment
Within the 1 day.
within the day.
Within day. Intraday trading also same thing, right? Today we are purchasing, the same day itself we are selling the securities. Here also the same thing. Today we'll get the loan, and today itself repayment will be done. Borrowing takes place morning of the business day, and the repayment will be scheduled after the same day afternoon or maybe same day evening. So within the same day, the borrowing and repayment should be done. That is called intraday money. These are different types of monies we have. Okay? Now we will talk about the important concepts like a treasury bill, commercial papers. These are very important in case of money market instruments. But first I'll talk about T-bills. You guys heard about this? T-bills, treasury bills.
Yes, sir.
Normally government will issue these treasury bills. It's very rare in our India, but in USA, the US government issue these treasury bonds and treasury bills. Bonds also we have treasury bonds. If government is issuing, that's we call it treasury bonds. Bills also same thing. Like these are the short-term instruments, less than a year. There will be treasury bonds even for more than a year also. Those are bonds. If it is the bills, less than a year. Understand the difference between treasury bonds and treasury bills, guys. I'll write it here. T bills and T bonds. Both are issued by the government only. If it is for more than 1 year, we can say it as a bond. If it is for less than 1 year, we should call it as a bills, treasury bills. It is also an instrument, but for the short-term instrument. Understanding? Hello.
Yes, Mahesh.
Yes, sir.
Yes.
So
Yes, sir.
these are all the borrowings will be done by the government, state government, central government, all will issue these treasury bonds. There will be like a promissory notes issued at a discount, and there will be fixed period. Basically, if they meet, if they want to meet any expenditure which is needed for the temporary requirement and all, governments and all will go for this kind of issuing of a bonds for the short-term requirements. Let's say for 1 month, 3 months, 6 months. The interest also will be a bit high in case of these bills. I mean, when we compare with the remaining long-term bonds, in case of short-term bonds, the interest also will be high, very high. But as the treasury bonds and government bonds, when we compare with the corporate bonds, again the interest rate is less. But because we have a high credit worthiness and high credit rating, right, in case of government, there won't be chances for the default. That's the reason the interest rate will be less when we compare with the outside, like commercial bonds and corporate bonds. Everyone getting the point?
Yes, sir.
Yes, sir.
Yes, sir.
And we have
So these bills are issued by RBI, sir.
central government, state government, and all will issue.
Okay, sir. Thank you, sir.
In USA, it will be issued by the federal government. Treasury bonds.
Okay, sir.
Normally, like suppose there is an opportunity cost. Do you know about the opportunity cost? What is an opportunity cost? Hello.
Chance, sir.
Opportunity
Opportunity
cost.
is chance. Opportunity.
I'll tell you. I have a 1 lakh capital. I have a 1 lakh
Okay,
money. 1 lakh money. Some of my friends are asking for borrowing. So if I lend this 1 lakh rupees at zero interest, zero fees, I'm not charging anything. I'm giving them for free of cost. What I'm losing? Suppose if I have the same 1 lakh rupees in my bank account, what I'll get?
Interest, sir.
At least savings interest I'll get, right? Savings back
Yes,
interest.
sir.
So because
Yes,
of I'm
sir.
giving this 1 lakh loan to someone else without charging any interest, I'm losing the same interest in the bank account, which is very safe for me. If I keep my money in bank account, there won't be any risk on that, right? Without
Yes.
risk also, I'll be able to generate at least 0.5% interest or something in my bank account. Even I'm losing this 0.5%, I'm giving it to my friend for 0% interest rate. So how much interest rate I'm
Yes,
losing here?
sir. 0.50.
This is called opportunity cost. This is called opportunity cost. By choosing another option, I'm losing one opportunity. I'm choosing my friend, so I'm losing 0.5% interest. This is the cost. We can call it as an opportunity cost. Okay. Similarly,
Okay,
for
sir.
every investment,
Okay, sir.
suppose if I want to consider the investment, okay, let's assume in bank I'll get 2% without risk. How much I can get? 2% I can get in a bank as a bank interest. If I keep my money in a bank account with a safe deposits, how much interest I'll get? 2% interest I'll get.
2%.
Suppose if I want to take a business, if I want to do business, if business is giving 2% only, will you do that business? If business is also getting the returns, the business is capable to earn 2% return. If you invest 100 rupees, 2 rupees you'll get. Now, will you consider that business?
No.
No,
Why?
sir. It is loss.
There is no loss. There is no gain.
There is
Because
Yes.
even if I keep my account, balance in my bank account, I'll get 2% interest, right? Without risk.
Yes, bank.
Yes, sir.
Without risk, I'll get
It is
2%.
security. It is security in bank.
Yeah, without risk itself, I'm able to get 2%. Then why should I take a risk and do business for 2% return? Getting the point?
sir.
So bank is a riskless rate. So can I call it as a risk-free return? Risk-free return. There is no risk at all. Understood?
Yes, sir.
Risk-free return means there is no risk at all. Without risk, I am able to generate a 2% interest. Now tell me, if you want to take a business, how much interest you will expect? 2% or more than 2%?
More than
More
2%.
than
More than
it is
2% only
risk.
you will expect, right? Normally, suppose let's assume I'm expecting 10% return. I'm expecting 10% return. So as a without risk, without any risk, I'm able to generate 2%. But if with risk, how much you're expecting?
10%.
So what is the amount of risk that you're taking extra?
8%.
8%. For 8% return, you are taking a risk, right?
Yes, sir.
So this is called risk premium. This is called risk premium. This is called risk-free return. If you want to calculate the risk part in the business investments and all, we have to consider this risk premium and risk-free return. Whenever we go for the risk evaluation, we have to consider and we have to keep these 2 points in our mind: risk premium and risk-free return. So risk-free return is 2%. But how can I say always risk-free return is 2%? Banks are not paying 2%. We know banks are not paying 2%. But what is the risk-free return? What return we should consider as a risk-free return? Here, for example, I told you banks are not paying 2%, right? So what risk return? What is the percentage of return? I can consider it as a risk-free return. For that reason, many governments will consider the return, the rate of interest of T-bills. The rate of interest of T-bills will be considered as a risk-free return. Suppose T-bills, treasury bills are paying 1%. In this case, my risk-free return will be 1% only. Now tell me, what is the risk premium in this case?
9%.
9%. So 9% extra risk you are
Yes,
taking.
sir.
So to calculate this
Yes,
risk
sir.
premium, we need a risk-free return. What is the risk-free return? 1%. How we are getting this 1%?
1%.
1% is nothing but treasury bills.
T-bills.
Why we are considering a treasury bills as risk-free return? Because these are issued by the governments. We call it as a risk-free securities. There won't be risk at all. Everyone are getting the point? The point is to understand about the treasury bills, guys. In the treasury bills, there won't be risk because they'll be issued by the government. That's what you need to remember. Everyone?
Yes, Mahesh.
Everyone understood?
Yes, sir.
The next one, commercial deposits. Sorry, certificate of deposits. Commercial paper we'll talk. Before that, let's talk about certificate of deposits. Certificate of deposits. We have like a FD, right? Fixed deposit. Everyone might know about FDs, fixed deposits. How we will invest into the fixed deposits? We will invest some amount into the bank for a specific duration. Let's say for 6 years, 10 years, like that, there will be duration for these fixed deposits. Then on maturity, we will realize that cash balance along with interest, or maybe periodically the interest payment also will be there. While depositing the fixed deposits, they will let us know about the interest rate, the maturity period, and everything, right? Basically, we are depositing the amount for specific duration. There will be maturity date and fixed interest rate is also there. Getting the point? Similarly,
Yes, Mahesh.
we have a certificate of deposits also. Certificate of deposits is nothing but like as an investor, if I'm investing some amount into the bank, I'll be getting one certificate. So what is the certificate? The certificate is a bearer instrument as a bond type. Whoever holds that certificate of deposit, they will be entitled to receive the interest. Suppose if I'm holding the certificate of deposits, I'll receive an interest. If I transfer this to someone else, they will receive an interest. Okay. So certificate of deposits will be issued by the commercial banks. Like we have, these banks, SBI Bank, HDFC, right? So those kind of banks will issue the certificate of deposits. The perfect example is fixed deposits, guys. Everything is a fixed deposit features only. Okay. I'll be giving nominees and everyone, right, in the fixed deposits also. I can give on whose name I'm depositing that money. So that amount will go to the respective person. The certificate of deposits also will work in the same way. Okay. Everyone understood?
Yes, sir.
Yes, Mahesh.
Yeah. Then we have a commercial paper. Basically, we need to remember who is able to issue this kind of bond. Treasury is by the government. Commercial, certificate of deposits by the whom? Government, banks, commercial banks and all will issue this certificate of deposits. Then we'll go for the
Corporations.
yeah, not corporations. Banks, certificate of deposits will be issued by the banks, commercial banks.
Okay, sir.
Commercial papers will be issued by the corporations,
Corporates.
large corporation companies. Corporations are nothing
Yes.
but companies. So these companies will issue the commercial papers because if they need money, they will sell these instruments, commercial papers in the public to get money to meet the short-term debt obligations. And if they want to pay back any loan, bank, they'll go for the commercial papers. Even the maturity period is also short duration, less than 1 year only. The maturity period also will be there. For short-term requirements, if company wants to meet the capital, they cannot go issue the debentures or bonds, right? For that reason, they will go for the commercial papers. So normally that will be sold for a discount less than the face value, and it also will carry the interest rate also. But interest rate is very less. Why the interest is very less? These commercial papers normally will be issued by the very high reputed companies who have a high credit rating. And all these kind of corporations will issue the companies with high credit rating. Companies will come forward to issue the commercial papers. Whenever there is a high credit rating, definitely the interest will be very less. But these are unsecured. These are unsecured. What is the secured and unsecured? What is unsecured and secured? There
Secure
will be
అంటే ఇప్పుడు
security. There will be secured with the assets,
ఇన్వెస్టర్స్
company
ఉండే
assets. Yeah, the charge will be created in the company's assets. At the time of liquidation or default or something, they will get a priority to repayment. But these commercial papers are always unsecured. There won't be any securitization on these bonds.
yes sir.
We call it as unsecured promissory notes. Did you guys heard about the concept of bridge finance? Winner pair bridge finance. I think every finance student will get a chance to go through this bridge finance. So bridge finance is nothing but for short-term requirements. Suppose I applied a loan. I applied a loan with SBI Bank. You know, right? If I'm applying a loan for a SBI Bank for long-term loan, maybe for long-term loan to start a business or project. If you want to construct a big building or something, I applied loan. Obviously, as an SBI Bank will take at least like 2-3 months time to allot my loan, the entire loan amount. Lot of formalities, everything need to be done, right? Because it's a long-term project, a lot of capital I need. Let's say I need at least like 1,000 crores I need. Lot of formalities will be there to allot this 100 crores loan. But until this allotment, I cannot wait, right? Without starting my project. There will be 2 months and 3 months delay in my project also. I cannot wait. So what I'll do, I'll go and issue these commercial papers. I'll go and issue this commercial paper for 1 month or 2 months. Less than 1
Yes,
year.
sir.
I'll issue those commercial papers to the public so that I'll get my required capital. I'll be using it for the project for 2 months and 3 months. Once I get this 100 crores capital, I'll repay these commercial papers. I got this money from the normal public, right? So I'll pay back these commercial papers amounts. Basically, to meet the short-term requirement. What is the short-term requirements? Until long-term capital allotment, I cannot stop my business. I cannot stop my project. So to meet
Yes,
the
sir.
short-term requirements, I got the loan requirement. I got this cash requirement through these commercial papers. So once I received the entire large amount of capital, large amount of loan, then I'll repay these commercial papers amounts. Yeah, that is a major purpose of having these commercial papers. Okay, everyone understood?
Yeah.
Yeah, this is all about money market instruments, guys. We do not have much thing to discuss, but maybe you guys have to remember about treasury bills, commercial papers, the difference between these two, and bridge finance. You may get a question about bridge finance, call money. That's it. You don't get much questions from these money market instruments.
Yes.
But T-bill is very important. Your voice is breaking now. Can anyone hear her voice?
Bridge finance. Sir, bridge finance.
Yeah, bridge finance.
అది చెప్పలే
ఇంకోసారి
Vietnam. Okay, I'll explain it one more time.
ఇంకొకసారి చెప్పండి సార్.
Okay, no problem. No problem. So, just again take the same example. Here am I applying for long-term
Okay.
loan. Long-term loan. Let's
Okay,
say the
sir.
duration of this loan will be for 20 years or 30 years. How much capital I'm applying? How much loan requirement I have? And 1,000 crores. So with this 1,000 crores,
1,000 crores.
I'm playing with the SBI. So to get this allotment of a 1,000 crores loan, definitely it will take a time of 2-3 months time. Maybe
2-3 months.
let's assume I am applying for this loan to build a project. I want to construct a big what is this mall, shopping mall and all. I have to construct. For that, I'm applying this 1,000 crores loan. So this
Okay, sir.
allotment of loan and sanctioning of loan, everything will take time, 2-3 months time. So I cannot wait and I cannot waste the time for 2-3 months, right? I can carry out
Yes,
few
sir.
activities within this 2 months and 3 months. So what I'll do, immediately I need capital for 2-3 months. For that reason,
Yes, sir.
I'll get a short-term requirements. Short-term requirements I have. So I'll issue these commercial papers to the public for 3 months or 4 months.
Yes.
I'll issue these commercial papers. The interest rate will also be there and
Yes.
everything. So I'll go and issue these commercial papers. Once I issue the commercial papers, I'll get my required capital. I'll get my required capital. So with that capital, I can start my
Required
business.
capital.
I can start my activities. I can do the business. I can do the production start. Everything I can start. I can do the project. Once I get this 100 crores,
Okay,
I
sir.
can pay back these commercial papers, right?
Yes, sir.
Let's assume by issuing these commercial papers, I got 200 crores. With this 200 crores, I can manage 2-3 months or 4 months, 5 months also I can manage. So I got this 200 crores and I'm running all my project. Once I
Yes,
got this
sir.
1,000 crores, I'll repay this 200 crores. I'll settle this
Yes,
commercial
sir.
paper.
Yes, sir.
So that is called bridge finance. If you are taking the
Okay.
short-term capital, short-term loans without disturbing your regular project duration, I cannot
Okay,
hold
sir.
and keep hold my project. So to meet my short-term requirement, should meet my temporary requirement, I'm taking a short-term loans, short-term capital. That is called bridge finance. I'm arranging a finance through these short-term instruments.
Okay, sir.
For short-term requirements. That is called bridge finance.
Bridge finance.
My short-term instruments can be any above. That can be, that cannot must be commercial paper. That can be anything, right?
Yes, that can be anything.
Okay.
As a meaning of bridge finance, it's not only required to be commercial paper. You can have any type of short-term loans.
Okay. Okay.
In majority cases, the commercial paper is the right word because certificate of deposit, government, bank one, so it won't work. Treasury bills, again, it's from the RBI, central government, it won't work. So what else? Commercial papers only.
Commercial paper. Okay. Fine.
Because this kind of projects and all will be taken care by the corporations, right?
Corporation.
So corporations they do not have much choices. Commercial paper is the only choice they have. If there are banks, they can go for the weekend loan, intraday won't work, overnight loan won't work, term loan maybe it will be for like 30 days, 60 days, 90 days. It may work in few cases. The interest amount will be very high. Again, it will be possible only closer associates. Again, I have to take it from the other bank, other financial institution, not from the public or someone.
Yeah.
But commercial paper is possible.
There is limitations for all those. Yeah.
Yes,
Yeah.
that's the reason.
Okay.
Understood, everyone? So these are the money market instruments, guys.
Okay, sir.
If anyone have any questions, we will discuss here. Hello?
కమర్షియల్ పేపర్ కి కమర్షియల్ బిల్ కి తేడా ఏంటి సార్?
Commercial paper
డిఫరెన్స్ బిట్వీన్ కమర్షియల్ బిల్ కి సార్.
కమర్షియల్ బిల్ ఎక్కడ డిస్కస్ చేయలేదు మనము. ట్రెజరీ బిల్, నాట్ కమర్షియల్ బిల్. Do you want the difference between the treasury bills and commercial paper?
నో సార్.
And what is
మనీ
commercial?
మార్కెట్ ఇన్స్ట్రుమెంట్స్ లో అది కూడా ఒక ఇన్స్ట్రుమెంట్ గా ఉంది సార్.
Commercial bill?
ఎస్ సార్.
No, I didn't heard about it.
ఓకే సార్.
Commercial paper is there. This commercial bill. They both are same. Sometimes
ఓకే సార్.
maybe if you're searching in Google or somewhere, it will give you the same meaning, commercial bill or commercial paper. But there is no bill. Only commercial
ఓకే
paper.
సార్.
Note, nothing but a bond paper or something. Note only, commercial paper only. We do not have commercial
Oh.
bill.
Okay, sir.
Okay, we do not have a treasury paper. Treasury bills only. The name itself we call it as treasury bills. Treasury means related to something central banking, treasury. So
Yes,
central
sir.
government, central banks and all will issue this treasury bonds. In that way, you can remember it easily.
Okay, sir. Thank you,
Anyone
sir.
else? Any questions?
Bro, commercial paper and bridge finance, what is the difference?
Commercial paper and bridge finance.
Bridge finance.
Bridge finance is something for the short-term requirements.
Okay.
If you are taking a short-term requirements finance, that is called bridge finance. Commercial paper is also for the short-term, but it is the type of an instrument. Bridge finance is not a type of instrument; it is an activity. I'm taking a finance for short-term requirement by using commercial papers. So commercial paper is an instrument. With this commercial paper instrument, I can get the required capital within less than 1 year. I can issue the commercial paper, and I can get the capital for short-term requirements. Understood, everyone? Hello,
Sir.
Lokesh, understood?
Yes, bro.
This is an
Yes, sir.
instrument, but bridge finance is not an instrument. It's a concept of borrowing.
Okay.
Then, anyone else?
No, sir.
Nice, I have a doubt actually.
Yeah, please go ahead.
Certificate of deposits is similar to FDs, you said.
Yes, similar to FDs.
FD,
Yes.
FDs can be issued by post office, banks, and NBFCs also they have mentioned.
I'm
I
not sure
don't
about
know.
NBFCs,
What
but post office will be there,
yeah.
and commercial pay banks is there. Features are same, but this commercial certificate deposits normally commercial banks only will issue this certificate of deposits.
Okay. Both are similar, right? FDs and certificate of deposit.
Yeah, we can say financial institutions. Basically, this deposits will be handled by the financial institutions.
Okay. Fine.
Maybe the post office also can carry out this certificate of deposit. I'm not sure, but as a financial institution, obviously they are also into the financial activities, right? So you
Yeah.
can take even that into consideration.
Okay.
Anyone else? Any more doubts, guys?
No, sir.
Can I stop the recording here? We have done with the money market as well. So let me stop the recording. And the recording.
Okay, sir.